The SmallCapPower Expert Interview.
Welcome, Mickey. In a recent interview, you stated that gold isn't going anywhere anytime soon. What makes you think it will remain range-bound within year-to-date high and lows for the short term?
It correlates with, inversely correlates with the U.S. dollar. So the U.S. dollar has been range-bound since it made that big run-up from, what, 80 to 98, and even went above 100 briefly in the end of last year and first couple of months of this year, but it's been range-bound since then. And unless the dollar goes into crapper, I don't think gold's going up, and I certainly do not think that it's going to go down much below these levels.
Are there any external factors that you think affect the gold price?
Well, this time of year, most definitely. We just put out a musing last week. It'll be available to syndicators tomorrow that shows a seasonality in gold. In 11 of the last 12 years, we've seen from a mid-June, early to mid-June high to a summer doldrums low in July or August, and then a rebound in October. And that's very easily explained. Number one, the summer doldrums. Nobody really cares, and there's lesser demand in gold. And then now we're into the Indian wedding and festival season, so demand, physical demand, significantly goes up. And pretty soon we've got the December holidays, what Frank Holmes calls the love trade in the West, where everybody's buying baubles for their wives and girlfriends.
Do you see any bright spots for the junior resource sector, given the fact that it's been depressed for more than 4 years now?
Well, I don't see very many, to tell you the truth. Now, that's not to say that good companies are still not prospering, because they are, and there have been some really nice moves this year, but the junior sector has really gone into this dichotomy of the haves, which are very few, and the have-nots, which are many, and until the prices of commodities turn around, I don't think that's going to change.
So what commodities do you think could lead a rebound in this space?
Well, the only commodity that really hasn't taken the big hit, and perhaps it's because it took the big hit earlier, is uranium, and I still remain a uranium bull. The three companies I cover right now are uranium companies, so that commodity is up 35% over the last year or so, and the supply-demand fundamentals are compelling on that. For copper, I think we've hit the low. The marginal cost of copper is about what it's trading at right now. So when that happens, you'll see production come off. Gold's a little tougher, especially with a strong U.S. dollar. I don't think gold's going anywhere anytime soon.
Can you tell our viewers some of your favorite current companies?
Well, the companies I cover right now are three uranium companies. I cover Energy Fuels, which is a domestic U.S. producer. I cover Uranium Resources, Inc., URI, which recently made a acquisition in Turkey that will put them on a fast track to ISR, in situ recovery production, within year and a half. And then I cover an Athabasca prospect generator, Canalaska Uranium, and they've got about 15 projects, 5 or 6 joint ventured in the Athabasca Basin. So the longer-term outlook for that company is quite compelling, I think. And before we go, I've got to give a disclaimer. The companies I talk about, I'm a committed shareholder of those, and they pay to sponsor my website.
How can viewers get in touch with you and learn more?
Well, it's a free subscription service because I run the aforementioned sponsor model. So the website is mercenarygeologist.com. If you go there, click on the box right below my mug shot and sign up, you get my stock picks. And then we also have nearly 51,000 followers on Twitter @mercenarygeo.
Thanks for taking the time for today's interview, Mickey.
Thanks a lot, Mark.